Hey everybody! Surprise!
What's going on?
We're together today.
Yes, we are. We're coming live to you from the offices of Leverage Lending Group. Ashley decided to surprise me today with a quick little surprise visit.
Yeah.
So, you know what? We're just going to go ahead and rip through Tuesday Talks right now, and we got some really good information. But first, I'm going to let Ashley introduce herself.
Ashley Hannah with Costello Real Estate, licensed real estate agent in North and South Carolina, here for all your buying and selling needs.
And I'm Angelo with Leverage Lending Group, aka CLT Mortgage Guy, President CEO of Leverage Lending Group, servicing North and South Carolina, focusing on the greater Charlotte area. So thank you everybody for joining. Ova events, Carmen 1125. So thanks everybody for joining. And if you have any questions, please feel free to shoot us a comment in the comment below for any questions that you may have going through this. So let me just okay. Just want to get this.
We're just trying to get our technology all together.
Bearing straight here.
Yeah. So a couple things that we wanted to discuss today. The August numbers were released from the Carolina MLS, the multiple listing service, and basically it paints a picture of sales price is way up, right? And inventory is low.
It's like the same.
Yeah,
the
it's
same
like a shocker, right?
Yeah, right. Same song and dance for the last couple months here. I think is it getting worse? Or is it kind of staying the same? It's not getting any better, I don't think.
Yeah, I mean, I think the sales price keeps going up.
Right.
And one thing that I was looking at one statistic and I thought that was interesting. There wasn't as many closings in August as there were prior month. That's not a huge red flag. It wasn't by a lot, but it was like one of those key indicators that you look at. In August, I mean, I feel like August is typically a pretty robust month. But traditionally, right, you're winding down the year a little bit.
Back in school.
Yeah.
The people are moving for school districts, so we see people are trying to get them moving before school starts and all that. And so now that's historically that's how it goes with purchases. Yeah.
But since COVID, I think this year has just looked differently. The sales cycle has looked differently. So I think we're going to see a steady flow. What have the rates ticked up?
They have not. So they're just, it's like a little seesaw. They're like up and down, like maybe 1/8%, 1/4% up or down. But rates are still phenomenal. You have a ton of buying power still right now. So now, but refis, now I misspoke last week. That 0.5% fee that I had mentioned, it is just refinances. It's not for purchases. I thought I had heard something or read something about that, but maybe there was people talking about it.
Yeah.
But anyways, it's just for refinances. So if anybody's looking to refi before December 1st, you want to start the process before, because it's only loans sold to Fannie and Freddie after December 1st. So it has to be closed and funded and sold prior to, not to get that hit. So think about doing the refi sooner rather than later. So
for refis, can the general consumer assume that their refinance package or whatever is going to be sold to Fannie or Freddie?
Correct.
Okay, so basically everybody who is even thinking about refinancing now.
Correct.
Right?
Yeah, it's because what that fee is going to do, you're going to either pay for it in dollars out of the pocket at closing, or it's going to be built into the rate, which is going to equivalent to about 1/8% in interest rate. So instead of getting a 2.875 rate, then it's going to be 3%. I'm just going to generalize it here.
Okay, that's a good rule of thumb.
Like an 1/8 or a 1/4 difference. So
okay.
Yeah, it's definitely gonna hit the refi. So if you're looking to refi, definitely definitely do it. Look into it now, regardless of who you go through. Look into it now versus later.
I mean, that's probably going to really put the brakes on refis, don't you think?
A little bit, yeah.
Okay.
It's gonna put the brakes on it a little bit, which are still great.
Yeah.
It's gonna. Yes, it will.
So what's the latest that you recommend starting the process?
So each lender that I work with they're implementing the new fee at different times.
Oh.
Flagstar Bank is implementing it today.
Really?
And yes, many banks are implementing it within the next week or two. Another wholesaler of mine, United Wholesale, they're not going to do it at all this month, but it's going to be at some point in time next month. They're going to implement
so
that.
It's too late.
No. You have to be locked prior to them implementing that fee. If you're not locked, then you're going to get hit with it. So you can be locked prior to when they put it on their rate sheet, and they're going to give us some lenders are going to give us an email a week or two beforehand saying, hey, on this day we're putting this in place, so if you have any loans, you better lock them now.
So like maybe the end of September would be the absolute
I would say
latest.
absolute, yeah, the latest.
Okay, that's good. I mean, that's like super good information because you can assume that if you're refinancing, it's going to be packaged and sent off to Fannie and Freddie.
To Fannie and Freddie, right? One of the two.
And so you're definitely gonna see that increase on at least by the latest December 1st.
Correct.
So do it by the end of September.
Yep, if you're looking to do it. So.
And it's a great time to do it, but it's just an added benefit, right?
Right.
So make sure that you reach out to Angelo to get more information on that.
Yeah, be more than happy to help.
So another thing that happened. So this is the first time this has ever happened to me, but I had a client who she could only have an FHA type loan, and basically what I ended up finding out was that is the weakest. If you're selling your house, an FHA offer is it's the weakest offer you can accept from because the whole goal when you sell your house is to get the most qualified, right? And the ready, willing, and able. So they have money in the bank, their credit score is fine. And an FHA loan tends to be for people that it's
a little bit more risky.
Yeah,
right?
It's not like a bad
risky.
thing. It's
no,
just
it's not.
how it is.
Right, and it does. The FHA loans have a stigma of being hard in underwriting or hard on appraisals, where that may be the case a little bit with appraisals, but they're not hard in underwriting. They're guaranteed by the federal government, so they're a little bit more lenient when it comes to the lower credit scores, the lower reserve requirements, and things like that. So it all just depends on your borrower and what they're looking at. But I'll let Ashley finish. She's got some great information about the price point and all that.
So what happened was, this client, Angela's like, listen, we can only get her in FHA, and I'm like, okay, that's fine, and she really needs help on closing costs from the seller, which you negotiate up front. And I'm like, it's a little bit rough because it is a seller's market typically. It's not unheard of. I mean, we're closing on one tomorrow that we got lots of funds to play with. But so what happened was her price point too was also a deciding factor.
Price point.
Max price point was $175,000. Sorry, $175,000. Inventory is extremely tight, under 200, literally no matter what. And then she's FHA. So then, we've put in 8 offers over the last 2 months. We did 8 offers. We were in multiple offer situations every single time. And not just 1 or 2, upwards of 7 usually.
Wow, that's crazy.
Yeah. And so you know, it already isn't a favorable loan. It already has like a negative mark, if you will.
Correct. Yep.
In a multiple offer situation because it's FHA. So, you know, we just kept getting rejected, or, you know, we just couldn't get anything accepted. And it wears on you. As a buyer, putting in offer after offer, looking at house after house. I mean, it's draining and it sucks. It really kind of eats your soul.
And how many houses do you think you showed her?
I mean, minimum 50. Minimum. And we
50
had to
houses. God.
and we had to be on it the second it hit the market because it would be under contract within 24 hours usually. So, and that's all fine. And we were on it and doing it. But, so what happened was this past weekend, she asked to terminate the agency agreement because, like, you know, it's been trying the last couple months. And I, of course, feel bad because, like, that's never happened to me, and I always want to do well by my clients. So, you know, I sent it over to her, and then I always like to, like, okay, what can I learn? What can I do better? How can I improve next time? So I was like, hang on, I want to know what percentage of FHA loans on the closed sales in the Charlotte region. I did Charlotte, I did Matthews, Gaston County. I think that was all the areas I kind of covered, which is where she was looking. And I said, anything under 185, I want to know in the sales that have closed in the last 7 days, how many of those were FHA?
This is like phenomenal information because she told me this today, and I was like, "What? Mind's blown." You never think this, yeah. So there were like 150-ish properties that were under 180,000 that closed in those areas in the last 7 days. Out of those 150, 7 of them were FHA. 7 out of 150. So 7 out of 150 deals that closed were FHA. That's crazy to me. You know, that's just, when you told me that number, I was like, "There's no way." But I mean, the stats are the stats. You know, you pulled that right from the MLS. So that goes to show you what she's trying to say here is that price point when going in on an offer, you have to have the strongest offer, and in that price point,
in this market
at that price point, there's just so much competition that they're not going to take any offer that's, you know, has a stigma like an FHA loan or you know, asking for closing costs.
Only one offer that was FHA got closing cost.
Of the 7?
Of the 7.
Whoa.
1. Yeah.
Wow.
And the properties that were FHA, I mean, there were a couple that were okay, but for the most part, I mean, it's not move-in ready, if you will, or I don't know. I mean, it wouldn't have met what my buyer needed. I just wanted to look at price point. Now, the percentage of the percentage of properties that close with an FHA loan starts to go up exponentially when you hit 200,000 plus. It's just that under 200,000, that is so tight, and on top of that, it's an inventory crunch.
Right.
And it wouldn't have been like that a year ago. Like we've closed several FHA loans.
Yeah. No, it's completely different a year ago.
Right.
Completely different.
I mean, and so because, you know, I just feel bad, and I felt bad mainly because I realized I didn't do a good job of setting expectations. Like, the chances that we are going to get accepted, our offer will get accepted on one of these properties that you want to put an offer in is less than 1%. And here's why.
And of course, that client doesn't want to hear that. They just want to see, you know, they want to see the houses and they want to try. But, you know, you bring up a good point is setting the expectation, saying, you know, and I'm not sure when you started with her, I'm not sure if you knew how hard it was going to be. I knew you knew it was going to be hard, but maybe not that hard.
Yes.
To get it done.
Like
right.
I mean, I knew it was going to be hard just because that price point, there's just no inventory out there. And anytime you see something, it's literally gone under contract within 24 hours. So, I mean, I knew it was going to be difficult that way. And I knew that FHA isn't ideal, but I never thought to look at that example that it was, because of FHA, that's why we're not getting accepted. And that's today's market. So if on a scale of like 1 to 5, this buyer, 1 being not favorable, not likely to get a property and an offer accepted, she's like a 1, right? 5 being the best.
Right. She had everything against her. She had the FHA, she needed the closing costs, and she had the price point.
Yeah.
So all 3 of those just made for a really difficult situation, and I was telling Ashley, it's hard. We always want to do the best for our client. We never want anybody to get upset. We never want, because our reputation is everything. And sometimes you just can't make everyone happy. You can't, you can't put all the pieces of the puzzle together, even though how bad you want to. And somebody may be disappointed in you, and it sucks. It hurts when something like that happens. And to anyone that's self-employed, that's watching, you understand, like, you want to do the best every single time. And it's just, you're going to have those 1 or 2 clients that just, you just can't.
There's nothing you can do.
You can't make them happy, So we're learning. I mean, we constantly are striving to get better, and we're learning our processes and kind of how to set expectations and price points. And so going forward, this is just a learning lesson for all of us.
And I
something
think
like that
too, because I called Angelo and I was like, this is what happened. And, the thing is that all you hear are rates are low, right? And we've talked about this in other past episodes.
Yeah.
You don't get into like why they're low or what you have to do to get that low rate, right? So another thing I think that isn't talked about as much is, okay, if your price point is under $200,000 and you can only qualify for an FHA loan, you might want to, some people have to move, but you might want to, like, if you can wait, maybe you should, because you're going to have a really hard time finding something. And what's happening is this, the sales prices are going up, and it's an inventory issue, supply and demand, right? So, I mean, I don't foresee this inventory issue being a thing for forever. I mean, it's eventually going to lighten up.
Right.
But I mean, you don't know when. You can never play the market that way. But if it were me and I was able to wait, a month or so, I would. If I could only get FHA and if I was under 200,000 in the Charlotte area.
And the reason that we went with an FHA, the best option for her for an FHA loan was because she needed to get the maximum dollar amount sales price wise. She needed to get that, and with FHA, we can go up to 48% debt ratio for an FHA approval, whereas conventional, anything 44.99 and below is approved. Anything above that, not getting approved, because you have to approve the MI.
So explain that a little bit.
Yeah, so...
like the debt ratio, you plug in someone's information.
Correct.
And yeah,
so you plug in, we look at all their income, we look at their expenses, we look at the principal, interest, taxes, insurance, any HOA fees, and we say, all right, this is, and then of course we ask initially, what do you want to keep your payment around? Okay, and then we build the sales price around that, and then usually clients ask, well, what if I wanted more? What if I wanted less? So we'll just,
play with
I'll put a comparison together of, let's say, 150, 175, and 200. Here's your comparisons between the two. Now, with this particular scenario, she needed the highest possible sales price, which means we had to get the highest possible debt ratio approval possible, which FHA would allow. Conventional won't allow anything over 44.99 that has mortgage insurance on it with the least amount of money down. So we had to go FHA with her to get that higher price point. And even at that, for conventional, she would have been dropped down to like 155 or 160, and there's zero in that price point. So that's why we went FHA, and it just stinks. It stinks that.
And I would call Angelo, and because he takes your financial picture, right? You give him all the info, and he puts it into the system, and that's gonna help determine the type of loan you can get, and whatever, right?
Right.
And then he sends me the letter, like, okay, here's their approved for X amount with this type of loan, and I'm like, okay, great. And then we shop, right? So I would, even a couple times during this process over the last couple months with this client, I remember I would call Angelo and be like, is there any way?
Yeah.
Feel like we can, is this like our only option? Is it has to be FHA and under 175? And he's like, yeah.
There was a way that I could have, and people listen to this, there was a way that I could have potentially gotten her an approval for a higher amount. The reason I couldn't is because she had a debt that she was co-signed on for a car payment for a significant other, and they're not together anymore. And so since she is still on that liability, just because somebody else pays for it, she's responsible.
Because her name's on it.
Her name is on it. Now, there's one way to get that, to not include that in their debt ratios, and that's to show 12 consecutive on-time payments. Consecutive. Like, you can't have missed a beat and anything like that. And they were paying her cash. So we couldn't prove on-time payments. Which
is a very unique situation.
Right.
You don't really hear about that.
The cash that she was given for this payment, it never really matched up to the payment. So there was no way I could even try to write a good letter of explanation because it didn't match.
Yeah.
So anyone that's co-signed on anything, or I guess what I should say is think twice about co-signing for somebody if you are in the process of maybe potentially buying a home in the future. Was there a question there?
Yeah. So are condos and townhouses seeing similar inventory issues as houses in the price point under 200,000? The answer is yes, because we were putting offers in townhouses, and we have to be careful, right? Because the
HOA fee,
right?
Yeah.
Which I was gonna cross that bridge with Angelo when we got there, but I was still being careful. But yeah, townhouses. I'm not sure about condos because isn't it like that just wasn't in her. That wasn't in her realm.
And condos, right? I don't think she wasn't wanting a condo. But I know condos, you can't get FHA, or you can do what's called a spot condo approval for FHA. You got to jump through a lot of hoops to get an FHA loan on a condo. But for conventional, you just, we can definitely get condos done and have to meet certain requirements. It's much easier than FHA. But yeah, to answer your question, everything in that price point
is just ridiculous. Like, it's very rare to get an offer accepted on a townhouse, and we'll just lump condos in here because it's all the same, right? When we're trying to talk about this, any condos, townhouses under 200,000 are flying off the shelves, and if you have an FHA, you're most likely going to run into issues. It'll be very challenging to get an offer accepted with that kind of term. Which is surprising, right? Because I would read random headlines that says everyone's moving, everyone wants a single family house in the country. And I'm like, not in Charlotte, they don't. These people just want a house to live in. So, yeah, which is unique. You normally don't see that kind of demand. But yeah, it was with those types of properties as well. So
yeah, and so it just we wanted to do today's Tuesday Talks about just how to deal with client expectations, how to deal with not being able to be there or be the right person for every single deal that comes across your desk. We're learning, we're learning potential client. We're learning how to pick our battles. What's going to be a good client for us. And then setting boundaries and standards and stuff too. And a lot of times clients they like to text you at all times of night. So when I also by boundaries there, it's like, all right, here's my time frame. I'm available from this time to this time. If it's an emergency, how to get in touch with me after this time. But if it's not an emergency, then please just let it wait until the morning, because we try to be available as much as possible, nights, weekends. Around 7 o'clock, I'm shutting it down. So, and I don't know, with you, it's...
I'm trying.
I'm usually on from 7 in the morning, and so I try to shut it down around that time.
With me, it's just, I think, it's managing the number of clients that I'm taking on at a time too. When you have a seller's market, being a buyer's agent it could be,
taxing.
Because you're dealing with, not to mention scheduling showings, you have to be like some kind of like spreadsheet ninja to like coordinate timing and like, wait, we can't have any overlapping showings and, and then things get pulled off the market. The second you schedule a showing and you get it all mapped out, then you get a text from the agent, oh, sorry, it's under contract. And you're like, okay, well now my whole showing schedule's just out the window. So that's fine. I'm available. I just, with a smaller number of clients, I like to just be available more.
Right.
But then I phase out a little bit, and that's where Angelo comes in once we're under contract. But it's just like when you're a small business owner, it's setting those boundaries, not like letting yourself get too down and just learning from every situation and on how to be better.
Yeah. I had a situation. One of my Google reviews that wasn't so hot, which I tried. Of course. Every single loan that we do is a representation of us and, and how we want to conduct business. So we could do 30 loans and then loan number 31, it blows up and then we suck. So we don't want that.
Because you're human and like you make a mistake or even if you don't.
Mistakes, we're only human.
Yeah.
Mistakes do happen. I had verbally quoted a client wrong. This is, a year or two ago. And I didn't want to do a verbal quote over the phone because I know how sometimes, I had to do a little bit more research. But I did anyways because he was just adamant that I get a verbal quote out to him. So I told him what I could do. And then about 2 hours later when I got back, when I was able to work on the file and dive deeper into it, I was like, oh crap, I can't get him this rate that I quoted. Immediately, this was about 2.5 hours after I verbally quoted him. Immediately, I called him, and it was after hours. I'm working after hours, but the bank that I was competing against doesn't work after hours. So I was able to get a hold of him and tell him, hey, I'm sorry, go with your first bank. That I can't compete with this quote. So he calls them apparently after hours, can't get anybody on the phone, and then calls me back and says I can't get them on the phone. I'll just have to deal with it in the morning. Called in the morning and the rates had ticked up just a little bit, so it was a little bit more costly to get that loan. Long story short, he tried to extort me to get a good review. He's like, if you don't basically pay the difference, then, you know.
Whoa, I didn't even know about that.
I'm going to give you, you know, you can keep your reviews intact. And then immediately when I said, I don't play that game, I don't, you know, I didn't send him an actual loan estimate either. It was verbal, and I told him it was verbal, and I told him I'd have to, you know, get back to him in a little bit, but this is, you know, just from what I'm looking at. And so once again, you know, go with your gut of what you normally do. I didn't at that particular time. I didn't want to, but
we want to make everyone happy.
Right. You know, and it bit me, and it hurt my reviews, and but you know, it doesn't. I learned from that, and so what I'm saying here is every time that something like this happens, someone's not extremely satisfied with you, if they're disappointed in whatever that, you know, whatever you were trying to do for them, you couldn't get done. You can't make everyone happy.
Yeah.
You just can't.
That could be tough
It's tough, you know, and we always want to do the best, and we're always trying to, you know, go above and beyond and set expectations and wow our clients, and we do 99% of the time. There's that one little 1% there that sometimes things could go off course. So,
and it, you know, it just kind of it's we're not everyone's cup of tea, and that's fine,
right?
You know, because we don't, and we're not going to accept every client, and we, you know, we were talking about that too. It's learning, right, and not letting it get you down,
right?
Because that's easy to do.
It's easy to beat yourself up, where, you know, you start to doubt yourself. You second guess yourself and your abilities and things like that when something doesn't go right, you know. But you got to understand, you're human. I'm sure you in your line of work, you have made a mistake. You know, it's just human. We're only.
I mean,
human.
like, we don't usually make mistakes.
Correct.
But, like, you know.
Right. You know, but so don't. I'm telling her don't. Because she's talked me off the ledge a few times too, and you know, I'm just trying to tell her, like, don't beat yourself up. Just use it as a learning experience. You know, now we kind of know what's you know, in this, and we learned a lot from this. I learned a ton from this. You know,
it's a different environment.
It is, yeah,
and it's important to, like, take a second and evaluate the market you're in, and then explain that to your clients so that they can know where to have their head at going forward. But, well, I think we'll wrap it up.
Yep, wrap it up.
Thanks for joining us.
Yeah, thank you, Thompson Investments. I know who you are. Thank you for the question. And Avery Harper, I just joined. What up, Avery? He's my boy out in Cali, doing fix and flips. Yep. But yeah, thank you everybody for joining, and hope you learned a little bit from this, and see you next week.
Yeah. And as always, be sure to send us your questions if you want us to answer anything next week. We will be back to our normal time of 1 p.m. Next Tuesday. Be sure to share this if you found it valuable.
Yeah.
Comment, like, you know, we're always looking to grow and expand. So, see you next week.
Bye-bye.